All right, as promised, we have Mr. Aseem Dhru, MD and CEO, and Mahesh Dayani, CBO at Small Business Finance Corp, who's joining right in the studios today. Thank you very much for your time. It is very interesting to have you, in our studio at a time that many of your peers are actually giving very good commentary on business, be it 5-star or some others as well, 30-35%. Before we come to your exact IPO details and stuff like that, talk to us, how's the business environment right now? What kind of buoyancy or the lack of it in areas you're operating in are you witnessing?
So one of the good things we are seeing is that for the first time after a long time in India, we are seeing both the macro and the micro being strong. Normally we have seen the story that normally we have given investors over the years has been that India is more a micro play, while macros we had our weaknesses at a fiscal deficit level or a trade deficit level, etc. This time we are in a sweet spot where we are seeing buoyancy in tax collection, we are seeing buoyancy in GST collections, and we are seeing that the micros of the economy also are doing well. What we are focused on is more the small businesses in small towns of India. We believe that ultimately NBFCs are coolies of credit. We take credit from banks and take it down to deep interiors of India. And we believe that there is a lot to be done in this segment of the economy. There are about 64 million small businesses in the country, of which only 8% get access to organized finance. So there is a huge runway ahead of us to execute. We have to be careful. It's a tough nut to crack. When it has been available, everybody has seen this segment over the years. It's a tough problem to solve, but it's only when you solve tough problems, that you get joy.
Big opportunities as well. That's why we're talking about, bigger margins, high growth, and of course. But before Vinny, I allow you to, on the business front, talk to us about how your geographical mix, your loan book is actually spread across geography,
yes.
Or even what are the other risk management or risk mitigation general policy which you definitely adopt at the company?
So first on the distribution side, we are present in 16 states. Now these 16 states almost contribute 92% of the total credit. So you've practically covered the entire India. And the way we've structured is that almost 1/3 is the distribution across zones. So South Zone, North Zone, West and East all put together. So you don't run into a concentration risk. The other part is that each of the states don't contribute more than 17-18 odd %. So we've been very, very conscious that on a risks front, we ensure that the portfolio is well spread, well distributed. So you don't run into any particular risk in case there's a event that happens or probably an environment doesn't, is not extremely conducive. So you can manage your business momentum moving forward. So that's one risk that we've solved. So if you look at our entire journey over the last 3-4 years, growth has been reasonable. The market's been growing at more than 23-24%. We've been growing slightly more, but we're coming off from a low base. So, but I think one of the key risks that we solved upfront was not to have a large concentration in a zone and in a state, so that we have a much more sustainable business momentum moving forward.
Right. Also I just want to understand, when I'm comparing with your peers right now, when I'm looking at the yields, that seems to be a bit lower. So on that front, if you could give us an understanding of the potential upside that we could expect from your yields, or how is that shaping up there?
So what tends to happen is yields are a function of your ticket sizes. So the moment your ticket sizes keep moving up, your ability to price only keeps going down. So if I were to just probably give you some sense on the pricing grids, the moment your ticket sizes start moving upwards of 40-50 lakhs, then you start charging close to 10-11 odd %. If you're in the range of 10 to 30 odd lakhs, then you're pricing between 14 to 16. The moment you go below 5, then you're crossing 20 and 22%. So if you look at our average ticket size is 10 odd lakhs fully secured, and yields are closer to 16%.
Also, India has been a highest net interest margin market in the world. Somewhere you have to be fair to the consumer as well and not overdo the pricing bit, because then you actually end up pushing a customer into delinquency. So you have to be fair, you have to look at the customer's business, you have to look at the customer's cash flows and price it, which is just the right sweet spot between what is fair to you as well as what is fair to the consumer.
Fair point.
Absolutely. And let's just talk a bit about the IPO as well. You are seeing you have a fresh issue of 600 crores now. How much of this is actually going to be used for the fund loan growth ahead, and would you be investing in the infra, manpower as well? What is the view on this?
So, as a finance company, I know we are forever a hungry business, and we will consume the entire amount of capital for growth. Not only capital, on this capital we will lever it with bank finance that we will take. But the entire thing will go to finance the loan growth that we see for the next 2 to 3 years.
Before I let you go, Mr. Dhru, I know you can talk about forward-looking statements, but I want to understand the top management's area of strategic focus. The principles on which you run, and the growth and everything will be actually based on.
So, when you are building a business, there are 3 things that you need to get right. The first thing is to get governance right. And when we say governance, it's not just honesty and integrity of numbers. It is about getting processes, controls, checks and balances all right. Then you get profitability right, because the unit economics of the business is very important. Thus, first you fix governance, then you get profitability. Scale is an outcome. When you generally, the mistake sometimes you make is that if you approach scale before putting governance and profitability in place, then that's cancerous growth. So what we have been focused on the last 6 years is to get scale and profitability right. Hopefully, get governance and profitability right. Hopefully, scale will come with time.
Scale definitely would come with time. Thank you very much, gentlemen, both of you dropping by in our studios, and we look forward to interacting with you from here on. Now that you are joining the listed companies club.
Thank you.
Thank you.